Good afternoon. A very warm welcome to Phillip Roundtable. I'm Kim, your host for today's discussion. Today we are honored to have two speakers with us, Mr. Lee Chun Hong, Head of Equities from Principal Asset Management Berhad, and Mr. Tan Jian Yuan, JY, Head of Research, Phillip Research Senyan Berhad. Apologies that Mr. Yap Chi Ken, Head of Investment Services from East Spring Investments Berhad, is unable to join us today due to health reasons. Allow us to introduce our first speaker for today, Mr. Lee Chun Hong. He's the Head of Equities of Principal Asset Management Berhad. Chun Hong has 19 years of experience in fund management and equity research. He joined Principal Asset Management Berhad in 2017 to manage unit trust funds and institutional mandates covering Malaysia and ASEAN markets. Prior to that, he was attached to Libra Invest Berhad, managing and supervising unit trust and research divisions that covered ASEAN and China-Hong Kong markets. He commenced his career in fund management industry at Public Mutual Berhad. He had research responsibilities for regional plantation and consumer sectors, as well as research country coverage of ASEAN markets. Subsequently, he was promoted to portfolio management, specializing on ASEAN markets. He started covering ASEAN markets since 2010. He was also previously with PwC as an auditor. Chun Hong holds a Bachelor of Commerce, Accounting and Finance, Monash University, Clayton campus. He's a CFA chartered holder. Our second speaker of today is Mr. JY Tan. He's the Head of Research of Phillip Research Senyan Berhad. JY has more than 10 years of sell-side industry experience, covering various industries including energy, petrochemical, manufacturing, automotive, and small cap in Malaysia. He is a fellow member of the Association of Chartered Certified Accountants, ACCA. Today, our conversation will revolve around Malaysia market review following the state election. Allow us to ask Chun Hong the first question, maybe. Right? About 2 months ago, we had just concluded the state election, status quo outcome as widely expected. Any comment on that outcome, Chun Hong?
Okay, it means stability. Yeah. So as you know, that ever since PMX or the Prime Minister of the 10th Prime Minister, Dato' Anwar Ibrahim, the market rally the last 2 months of the year in 2022 subsequently has been downtrend after that, partly because in anticipation of this state election. Of course, it remains status quo, which means stability. So in the past, Malaysia market has been brought down by political uncertainty since Pakatan came on board in 2018. And ever since then, the risk premium has spiked up. Yeah. So with the conclusion of the sixth state election, we think it's a good thing. So hopefully this government can start and stay for the next 5 years, and then we can see more reform in the economy policy. Yeah, thanks.
All right, thank you, Chun Hong. Anything to add, Jian Yuan?
Yeah, I think like what Chun Hong has mentioned earlier, retaining the political status quo is definitely a positive thing, but definitely not a surprise. And lifting this overhang will definitely be very good for the market, as investors can really focus back on the fundamentals and ignoring all these noises. And hopefully this will also allow PM Anwar to actually focus on delivering the promised reforms and policies.
Thank you so much, JY. JY, would you like to elaborate how has been the performance of Malaysia market following a state election? Any interesting movements in the market worth mentioning?
I think overall the quarter has generally been good to the market. We saw KLCI actually perform well, narrowing the year-to-date losses to, I believe, will be about -4 or 5%. Although we have again underperformed the broader regional market. But I think in terms of something that's worth mentioning is property has done really well. Some of the other sectors like utilities, construction, energy, also some of the sectors that are worth mentioning as well.
Yeah. Would you like to add on anything, Chun Hong, apart from what has been mentioned by JY?
Yeah, as mentioned by JY, things has improved. Fund flow had come back, and interestingly, it came back just before the state election concluded. At least why happened because the government or the current government came out with some framework like the Madani government and also this National Energy Transition Roadmap, which was announced in July. So as you know that prior to this, we have different prime minister, 3 or 4, can't remember. I mean, it's just too many in the last 5 years, and no specific economic policy being announced during this period. So this time around, at least we have some direction, and a direction is what the investor want anyway from the market. Yeah, so equity investor always need some direction or guidance of where the government want to bring the economy or the country forward. So it's positive and things has improved. Domestic names has improved, like I mentioned by JY, the property, the construction, utility, and of course energy is driven by the higher than expected oil price. Yeah, thanks.
Yep. Chun Hong rightfully pointed out that there has been some notable inflows from foreign investors ever before we concluded the state election. We mentioned about property, utilities, construction. Can we expect those sectors that we mentioned earlier, like energy, properties, whatnot, continue being in favor, Chun Hong?
Yes and no. So on utility, I mean, what drive the utility? Partly because of the prices that we sold to, or energy that we sold to Singapore at a high price because of the tension happening around the world. So this would continue, but of course, we're coming from a peak season, so we think this one kind of. But another positive thing is on the tenaga side, as you know that in the past, tenaga have been subsidizing the energy prices, partly because of the COVID, and prior to that, there was a concern that the trade receivable will just blow up. But of course, with the new government, things are improved. At least we get some certainty. Okay, trade receivable reduced, and I think going forward, as you know, that our energy bill or utility bill has been going up. Those that consuming more than 700 ringgit, so subsidies is reduced, so less burden that the tenaga to carry. As a property, it's a cycle, but of course, property has been sold down ever since COVID to the very depressed level that you never seen before. So at the moment they are trading still below the pre-COVID level, so that might be room for property to go up, but not all kind of property, only those that can deliver and execute and in favor by the property buyer will be able to sustain the performance. Okay, so the property buying demand is still there. As for the fund flow, foreigner have been focusing on those that have fundamental or improving fundamental, so utility, property in certain way, and also energy at the same time. Yeah, but just point out that foreign fund flow or foreign ownership is at the historical low. I mean, the past it was more than 20%. Right now, it's dropping below 20%. If you strip off the long-term foreign shareholders like Nestle or that, I mean, the active fund manager or foreign fund manager that is in Malaysia is less than 3 to 4%. So we reckon that the foreign outflow could taper off, and hopefully with the Madani government and more detailed framework being shared with the market, foreign fund flow or interest will come back to Malaysia eventually. Yeah, thanks.
All right. Thank you, Chun Hong. So we mentioned about some of the top performing sectors like properties, construction, and utilities are actually getting a lot of traction of late. Also, I think part of the reason is because of the inflows from foreign investors. Jian Yan, would you like to comment on some of the laggards this year, for example, the finance sectors? So would this sector continue to be in the lagging sector again?
So generally, I think if you ask in terms of the financials, I think that we are not too positive on that. We think that loan growth will continue to moderate, and on the back of the more challenging macro environment. So definitely is somewhere where they are more concerned of. But I think like what Chun Hong has mentioned, fund flow is at a historical low. So for the foreign outflow will actually taper off. And on that note, at the end of the day, foreigners will continue to center back around some of the common names. For instance, if you look at year to date, I think that foreigners is still net buying on Maybank, despite the share price was has been fairly flat. Yeah.
Yeah, I think it also means that the underperformance of Malaysian market is not really across the board lah. There are also some sectors or even some names that are actually worth mentioning. Moving on to the next question, the World Bank cut Malaysian GDP growth forecast to 3.9% for 2023 from 4.3% projected previously, amid substantial deceleration in external demand. However, the bank raised its 2024 projection for Malaysian GDP to grow 4.3%, up from 4.2% previously. What challenges does the country currently face, and what factors contribute to these changes in economic outlook? Chun Hong, would you like to start first?
Yeah, thanks for the question. First of all, the cut is because we come from a high base last year. And bear in mind, this year is a bit peculiar. So you can see that, we just came out from Christmas and then followed by Chinese New Year, and immediately followed by the school reopening, and after that, Hari Raya. Everything just lumped into the first 4 months. So that's why you expect all this consumption be driven then, and after that it was just taper off, and there isn't any reason for you to spend more money, and especially after you spend so much for your Chinese New Year or this festival and back to school. So of course, your wallet will shrink after that. And then of course, subsequently, everyone expect China reopening, you will see some positive spillover into this region, but sadly enough, China continue to be brought down by the internal issue, and also it's still the government still trying to do something about it, and still yet to be surprise the market on the positive side and continue to disappoint on the stimulus side. So yes, for 2023 is a foregone conclusion that the GDP growth potentially would grow below 4%. As for 2024, the upgrade may be due to the base effect, and also, hopefully by then China will find some footing and some recovery to be expected from China, and also the semicon draft that we see in 2023. So hopefully they will see some recovery in the North Asia like Korea and Taiwan, and will spill over to Malaysia, which will play a big part on the E&E side. So we are featured on the top 10 producer of the world. So hopefully with this combination, we see some recovery in 2024. But something bear in mind, this high interest rate in the developed market would potentially tilt the economy into recession. But it's too early to tell. Yeah, things are, last 2 months actually show some recovery on the PMI side in Korea, Thailand, and even Taiwan. So hopefully we'll see some recovery in Malaysia as well in terms of export number. Yeah.
Okay. Thank you so much, Chun Hong. Seems that the recovery momentum this year and next year are expected to slow down amidst of the headwinds there. JY, would you like to add on what has been discussed just now?
Yeah, I think adding on to what Chun Hong has mentioned earlier, the cut was due to the weaker than expected global trade. If you look at the recent trade volume, fell at the sharpest rate since the COVID pandemic, and of course Malaysia being a trade-dependent country will immediately be hurt by this. And against the early expectation of a possible rate cut in 2023, it seems like the Global Central Bank is looking to maintain the rates higher for longer. So I think business in general will remain cautious in terms of spending, slow demand, tempering the whole Malaysian growth, like what Chun Hong has mentioned earlier. I think moving into 2024, we believe that it will just be an adjustment due to the lower base in 2023. But since interest rate is expected to decline next year, it could actually boost some business confidence. But that being said, World Bank cutting on China growth next year, that could potentially drag some momentum in terms of the growth for Malaysia due to the strong trade relationship between both the countries.
Okay, thank you, JY, for the comment. I think 4%, over 4% kind of growth is still quite modest for Malaysia. We talk about challenges. Let's talk about opportunities. We see Prime Minister Anwar Ibrahim has been actively engaging leaders from US, from China and Singapore recently and introduced initiatives like National Energy Transition Roadmap, right? Then the National Industrial Master Plan 2030, 12th Malaysia Plan Midterm Review, and Johor Singapore Special Economic Zone. Looking ahead, Chun Hong, what's the country's outlook and what strategies could investors adopt to capitalize on these opportunities?
That's a lot to be to share here. I mean, of course, to position Malaysia as a renewable energy hub is positive. As you know that around the world, all the corporates are looking to clean their emission. So the only way is to either buy the carbon credits or invest more on the renewable. So for Malaysia side in particular, we have been benefiting like the rest of the ASEAN, all this China Plus One strategy, all this MNC are moving to this part of the world on top of the South Asia. But what made Malaysia stand out is our energy reserve actually have more than 20%. Compared to the rest of the region, they are in deficit. They don't have enough energy going forward to actually to support all these new FDI coming in. So if they can pull renewable, you should be able to attract more FDI coming into this part that want a clean energy. Okay, so if they can pull it off, then we become a hub and then we increase the employment in Malaysia and also lift up the standard of living for Malaysia. Then on top of that, continuing from China's Plus One strategy is ongoing at the moment. But the latest trend is to be the type in US and Ukraine. Right now, Israel and Hamas, and they think the next one will be China and Taiwan. So they're avoiding Taiwan at the moment as well. So anyone from Taiwan, the corporate also would like to go out of the region. And also coming from the visit to Johor and Penang, my colleague has shared that, I mean, they are seeing a lot more interest from Taiwan. So this Taiwan Plus One strategy, it is happening. Of course, the latest thing will be the Johor and Singapore relationship. So in the past, as you know, that Malaysia and Singapore has not been in favor because of a previous prime minister. Okay, so with the current prime minister, which is friendlier to the foreign country, especially in Singapore, so we could position ourselves something similar like Shenzhen and Hong Kong. Of course, it's very different because Shenzhen and Hong Kong is under one umbrella, which is China, whereas Singapore and Johor are two separate governments. But of course, the ongoing discussion between these countries is improving, and of course, there will be some retreat between the Prime Minister and also the Prime Minister of Singapore by end of this month. So hopefully we can hear further news on how they're going to further tighten their relationship and position Malaysia or Johor and Singapore as a better hub to attract the FDI. So there's a lot positive going on, and of course, but this one will take some time to play out. Yep. So if you travel to Johor, you will see that the cost of living or standard of living is way higher, or if not comparable to KL, but it's driven by all this employment they have in Singapore that spill over to Johor. Yeah.
Yep. Thank you, Chun Hong.
So sector that benefit could be utility, energy, and also those that are exposed to the China's Plus One strategy, which is the E&E sector. You have the EMS, the automatic maker, all that should benefit, and also property or those company with large land bank in Johor could benefit from this better collaboration between Johor and Singapore going forward.
Yep. So those sectors that Chun Hong mentioned just now is also in line with the outperformance year to date this year. JY would like to add on what Chun Hong has mentioned earlier. What's the country outlook moving forward in view of all these initiatives introduced by Prime Minister and the government, and what strategies could investors adopt to capitalize on these opportunities?
I think basically a lot that John has elaborated. I think overall the roadmap is there. But of course, if you ask us, all this reform, if executed right, on track, then of course it will be a long-term positive. I think for instance, NIMP, at the end of the day, is transforming Malaysia to be a high-income, industrialized country. So definitely how investors may want to capitalize on all this really is to start positioning into all these sector like your construction, your tech, your EMS, not just over in Penang, Johor is also flourishing because of all this. So I mean, if you look in construction, of course, it will be one of the key beneficiary. Increased DE spending over the next couple of years. And of course, we are definitely not forgetting the solar, the utility, with the high more than 1 trillion investment that's being required for the NETR.
Yep. 1.85 trillion investment in NETI also means that there are pockets of opportunities within Malaysia. Moving on to the next question, recently we see there has been a resurgence of M&A activities in the market, with Sime Darby acquiring 61% of UMW. Chun Hong, do you think there's more to come?
Possible. I mean, after post that announcement, I mean, there was supposed to be an acquisition of plastic plantation by Kuala Lumpur Kepong KLK, but of course this one was rejected at the last minute. It's possible, but I wouldn't rule out the possibility. But of course, with the rising interest rate environment, I mean, this kind of activity might be quite muted unless it's driven by the government. Yeah. Thanks.
Okay, thank you, Chun Hong. JY, do you have anything to add?
Yeah, I think the cuts has always been on the table, not just specifically on the auto side. We have definitely seen activity across some of the other sectors, right? I think generally a lot of people, as well as body, are just pushing towards consolidation. But at the end of the day, I think one of the biggest hurdle is definitely on the valuation. But definitely, we do believe that there is a possibility that there will be more to come.
Yep, we hear you. Valuation could be one of the challenges. Like what Chun Hong say, interest rate could be another challenge that we are going to face. Right. In the latest September meeting, Bank Negara Malaysia has maintained its OPR at 3% amid growth and inflation moderation. Chun Hong, what can we anticipate regarding the outlook of our OPR?
Our house view for the rest of the year, we think they will maintain at 3%, and we will not rule out for 2024 that potentially could be a 25 bips increase if the government does rationalize their subsidy in the future, like increasing the petrol price in 2024. But at the moment, we do not rule out a hike in 2024. But as for 2023, we think they are done. Yep. But too hard to tell. Yeah, because I mean, like the Bank of Indonesia, 2 months ago they say that they do not mention a rate cut, but not to because the currency weakened more than 5% in 2 weeks' time. So I think they need to balance out the volatility of the currency and also the economic outlook in Malaysia. But again, just to remind the attendants, our OPR prior to pre-COVID was way above 3%. Yeah, I think it's 3.5%. So the 3% is not very high in general. But of course, the economy is still quite soft. So Bank Negara is trying to balance these two. Yeah.
Okay, thank you, Chun Hong. JY, do you think BNM will continue to maintain the OPR at 3%, or whether there's only possibility of rate hike like what Chun Hong said in 2024?
Yeah, I think similar here. I think that this year we are not expecting any OPR cut, OPR hike from BNM. But next year things are looking a bit fluid. But personally, we do believe that OPR might potentially have some form of rate hike. I think at the end of the day, it really depends on the targeted fuel subsidy mechanism, whether that will actually result in any spike in terms of the inflation post implementation, and that could make BNM to actually relook into it again. But again, if you look in terms of the latest budget, there was also a lack in mention in terms of the petrol subsidy, only on the diesel side. and how fast and how they do it, there will continue to be uncertainty on the inflation. So I guess that we just have to see how what is the plan for government in terms of the petrol subsidy.
Okay, thank you, JY. And since we are on budget, let's talk about budget 2024, which was just tabled on 13 October. Chun Hong, any comment on the budget and which sectors are the beneficiaries of this budget?
Personally, I expect more from the budget 2024, but again, so the general feedback I get is the budget is bigger than expected and it's expansionary, and a lot of focus to increase the revenue, but not through taxes. Of course, new taxes are being introduced, and unfortunately, they didn't switch from SST or towards GST. Instead, they increased the SST from 6% to 8%. Yep. So, and also another focus is to reduce subsidies. And the last thing we'd like to point out is the development expenditure, which is to increase on the infra spending, is actually fixed at more than 3%. So that is a good thing. So hopefully this one will spur some interest into the construction sector. And of course, this will spill over to other sectors as well. As you know, that construction sector, the multiplier effect is one of the better one for any country. So this one will translate into consumption eventually, and also property, and then auto. Yeah, by that it will be later stage. So construction will benefit. Of course, all these cash hand out to the M40 and below will benefit some of the consumer names, those that would benefit from the down trading. That one sector that could benefit from the budget. So, and at the same time, also there was a talks on relaxation on the MN2H. So that will also spur some interest on property at the same time. Yeah, and the good thing is they didn't introduce any tax that will punish any property, any listed company like in the past, the Cukai Mamo or prosperity tax. So yeah, so that is one good thing that we take from the budget, of course, but we expect more from budget 2024. Hopeful that they will announce more goodies in the coming weeks or months from the Mandarin government. Yeah.
Okay. Thank you, Chun Hong. Anything to add, JY?
I think everyone probably felt the same way. Budget did not excite the market due to the part of the reason was due to the absence of the goodies for the rakyat. I think the takeaway from this budget is overall, I think T20 may feel the negative impact on some of the new taxes. Those that B40 is not participating, whereas on the other hand, saving was actually channeled to support the B40 as expected. And if you ask us, we think that the overall introduction of the new taxes, as well as the raising of some of the current one, help to actually widen the tax base and enhance the fiscal sustainability. But again, it has been relatively conservative in terms of the new policies. I think some of the thing that's worth highlighting, I think again and again, I think one of the things that we see is that there was no new gaming and sin tax being mentioned. So I think that provides some sense of relief. I think in terms of some of the green initiative, some tax allowance being introduced, I think that's not a surprise. In line with what we are trying to transform into. Higher SST, and of course the biggest allocation for the budget, and which is needed to actually kickstart the economy. So I think that all these should be taken positive. But I think that to sum up the budget, I think generally we see that it's positive for the EMS, tech, healthcare, utility, solar, and the oil and gas player. Yeah, and of course, as well as construction. Yeah.
Okay, we hear you, JY. Moving on to the next question, ringgit, right? Chun Hong, ringgit has been under pressure due to strong dollar and slower than expected recovery in China. what's the outlook of ringgit looking ahead?
Yes, I mean, nobody expect the ringgit to weaken or break lower. Yeah. So of course, I mean, these are driven by the higher than expected kind of interest rate and will stay longer statement from our U.S. central banker. So that actually triggered the recent leg down. But I think that, I mean, looking at the interest rate differential, of course, a lot of people are moving the deposit from ringgit base toward the US base because of the higher interest rate that you can get from putting the money there. That is the main reason why the ringgit actually weakened a lot. And also the growth also has slowed down a bit. That also putting some pressure on the ringgit. But of course, if you reckon that the pace of interest rate hike in US has peaked, and then dollar could have some breathing room in the coming months. But everyone just watching for the November statement, whether the central bank in US, the Fed Reserve, would continue to increase the interest rate. So at the moment, the market already accept the fact that this rate will stay high for longer. The question right now the market is asking is whether they can actually go above or towards 6% in US. So that is what people are watching for. But of course, not helping also this recent war in Israel and Hamas. Usually, US dollar is a safe haven. So the war hopefully can be contained and will not escalate further from here. If not, then the emerging currency like Malaysia ringgit and the rest would suffer as well because they are moving to a safe haven like US dollar or even gold. So a lot of noises at the moment. So we need all these noises to go past, and then we have some breathing room for the central bank and also for Malaysian as well. So yeah, so this is one of the reasons why the economy are slowing down as well, because the consumption would taper off because you'll be cautious in spending, and also the imported inflation are eating into your wallet. So this is not positive, to the whole world actually. Yeah, so even the central bank in US need to monitor about how they maneuver this as well. Because I mean, strong dollar is good for the population, might not be good for the whole entire world, and then would drag the whole US down together as well. Yeah.
Okay, thank you, Chun Hong. Anything to add on ringgit weakness, JY?
Yeah, I think the keyword here is high for longer. We think that US Fed fund rates will continue to stay that way. And ultimately this will lead to the interest rate differential to continue to widen. But of course, this is on the back of assumption that Bank Negara is actually done hiking OPR for now. So I think in the near term, we believe that ringgit will continue to stay weak, possibly around the 460, 480 level. But maybe we could see some form of strengthening sometime towards the second half of next year. But again, this is on the belief that US rates actually potentially peaking in the first half next year, and who knows, potentially a rate cut in the second half. But I think overall wise, I think it has been mentioned a few times here that things remain very fluid. But looking at the current data point, seems like this is the base case for us for now.
Thank you, JY. The last question of today's session. So before we end the session, Chun Hong, what's the outlook of Malaysia market looking ahead? Are there any significant catalysts, opportunities, or challenges on the horizon? And moreover, how can investors navigate and make the most of these circumstances?
So as a house, we've been advising our client to focus on income and growth at the same time. So income, why income? Partly because the interest rate or even the bond yield is trading quite an attractive level, given where the inflation is at the moment, and we are not entering into any recession for Malaysia. We don't expect that, at least for the next 1 or 2 years. That's why we say focus on income, but at the same time also we focus on the growth, because there are opportunity as well, as mentioned earlier on by both of us. One of it is the China plus one, Taiwan plus one strategy. So this FDI coming in to Malaysia is real. I mean, not just headline, but it is real. Okay. So my colleague just came back from Penang saying that one EV battery maker from China actually bought 65 acres of land in Batu Kawan. So that is something new to me. So yeah, so this FDI coming into Malaysia is real. Okay, so that is opportunity as well. And also renewable, as mentioned by JY a few times, the solar player and also the grid maker, or the largest beneficiary will be Tenaga, because they own the grids. Of course, those that have to build a new grid will benefit as well through construction or through the supply of the material. And also, as mentioned earlier, that stronger collaboration between Singapore and Johor will stand out in the eye of foreign investor. Because, I mean, Johor have the big land bank, big population, and Singapore have the strong IP and strong currency. If they can actually work something out, so that is another interesting team for Malaysia going forward. So there are a few things. As for the banks, yes, it's a laggard, but if you break it up into a company specific, there are certain company or banks actually will start to show some improvement. And of course, banks like maybe the dividend yield at more than 6% is more attractive than you putting your money in the FD at the moment. So, but barring that, any recession in Malaysia. So yeah, that's why the banks at certain level will be quite attractive, and certain banks actually will start to show some earnings growth in the second half of this year after showing a worse than expected earnings the first half. So there are a lot of opportunity on the horizon. Of course, as an exporter of oil, Malaysia, we have certain company that will benefit from the high oil prices in the world. So there are a few things. Don't give up on Malaysia. There are, and also the valuation wise, and also the foreign ownership by foreigners is at the historical low. So we reckon the downside is quite limited. Upside are quite balanced. To see further upside, we need the execution from the government. So without that, Malaysia as a whole might not be able to show any outperformance against the region. So the next stage is for the government to show the world that they can actually execute whatever they promised or whatever they announced earlier in July. Yeah, thanks.
Thank you, Chun Hong. We hear you on the opportunities and also Malaysian markets valuation as well as low foreign shareholding. Is there anything to add, JY? Are there any opportunities or challenges on the horizon for Malaysian market? And how can investors navigate and make the most of these circumstances?
Yeah, we believe that, of course, there are always money to be made. We see opportunities, especially in the small mid-cap space. And I think broadly, we actually recommend to position into those sectors that has like a clear team, strong earnings visibility, and I think more importantly is really a sector with a structural growth story. I think Chun Hong has mentioned a few times the China plus one, Taiwan plus one. So that will continue to benefit some of the sectors like EMS, your tech over in Penang, Johor. I think something to add on in terms of all these FDIs. I think PM Anwar has done a good job in bringing in a lot of FDI so far. I think for instance, I think over the past few months, if I didn't get my number mixed up, I think at the downstream petrochemical side, there was about more than 100 billion ringgit of projects that was being announced, and the biggest was by this Rongshen, which is China's largest petrochemical company as well. So we do believe that there will be some spillover effect for the Malaysia players as well. So I think apart from EMS tech, I think of course construction here, pump priming team. We also like the healthcare to be on the defensive side. I think oil and gas will likely see some interest. I think that over the past couple of years, I think generally the national oil company, the IOCs, has been delaying on the maintenance. So we do think that they can only delay for so long. And we are expecting activities to remain robust. I think at least moving into next year. I think, of course, the solar, the utilities are benefiting from the NETR again. I think that in the early stage, most of the solar EPCC companies will actually be benefiting from all this. Yeah.
All right. Thank you so much, JY. We hear you on the policy.
Yeah, sorry to touch on the challenge.
Yep, Chun Hong.
Sorry, forgot to touch on the challenges. So the challenges that we are watching out is the performance of the ringgit, and of course the interest rate in US at the same time. And lastly is whether China can pull themselves out of whatever they are in right now. So these two big countries is key to watch out for. Of course, this sanction on the China tax towards China also it's not healthy. We've seen that before in 2018, and of course the rising geopolitical tension. So the ongoing tension between Russia and Ukraine and Israel and Hamas will not spread out. So yeah, this will affect the sentiment on the emerging market. Yeah. So yeah, these are challenges we have to go through.
All right. Thank you, Chun Hong and JY. We hear you on the policies, the FDI, the valuation, shareholding, and opportunities in various sectors within Malaysia market. We'd like to thank Chun Hong and JY for joining us as a panelist today, and we are also happy to see a lot of participants joining our session today, and we will see you guys in the next session. Thank you so much. Take care and goodbye.